Hi, I'm Peter Rose, founder of Longwood Currency Trading. How do you get started trading currencies? Maybe you're within 6 months and you've got an account and you're floundering around and you just have no clue. You're tired of watching all these guys on the videos telling you ought to be compounding and using Bollinger Bands and all the rest of this. How do you get started? And for those of you that are just getting interested in the possibilities of currencies, look, do yourself a favor first, before you listen to anything I have to say, is go to my website at longwoodcurrencytrading.com and click on the currency trading option on the menu, and it'll bring you to a page where I discuss the 7 reasons why I think currency trading is the safest and most practical vehicle available for us as retail traders or investors to increase our wealth. I spent 40 years in real estate. I know what I'm talking about. If there's anything out there that was better at doing wealth building and income, I would be doing it. I wish that currency trading would have been available to us when I first started out studying financial markets back in it was the mid-1970s. I think I started looking into stocks and options, and then after a while I started studying commodities. I traded options for about 4 years. I didn't get involved in the currency markets till 2007. Did that as an academic exercise because I've got a bachelor's in physics and spent 33 years as a senior software development engineer, applications development engineer. So I was interested in the academic aspects of the currency market. So I didn't open a live account, mini account, until 2012. But I don't think there's a more viable context for you to study to determine whether investing or trading or whatever is going to be your ticket out. I only tend to work with 4 and low 5-figure real account holders, traders that aren't experiencing the success that they should. And sometimes that's a little late because they've already built bad habits and they want to argue with me because I'm trying to tell them the straight scoop, and they go, oh, but I watched this guy, I think, and he made $400,000, he made $20,000 today, he's making 50 pips, 75 pips a day, and just the other day they made 1,200 pips. No, they didn't make 75 pips that day. They might have traded 7 full lots and made 15 pips or something, but come on, let's be realistic about how you're reading what this information that's out there, what that means. What does that mean? How do you get started? What's the problem you're trying to solve? Trying to make money. How much money do you need to make? Well, in working with someone who's in the live accounts already, trading a few minis or maybe up to 2 full lots, and I'm not talking 200 to 1 leverage either. Okay, you got to have the financial backing to cover your margin and then have plenty of room to have breathing room for that price to expand, so you can take into context losses that you're going to have, plus the fact once you get out of the entry stage and into position management where you are taught how to stage in, you want to have money left over in that account in order to add lots without having to worry about where that margin level is, because then you're averaging that out. In the United States, a margin is 5% of the cash value of the currency price, which means on a cash value of $125,000 of currency, which would be 1.2500 multiplied by 100,000 is $125,000. If you wanted to buy it 100%, you'd pay $125,000 for it. The U.S. government wants you to have a 5% margin on that. So if price, to make things easy, was 1.00000, you'd have $100,000 of cash value. You need $5,000 to trade 1 full lot in margin, or $500 to trade a mini lot. if you're in a country that doesn't worry about margin and is going to give you 200 to 1 leverage, please don't watch my channel. I'm not going to be able to help you out, because you need $1,000 for every 1 mini lot that you're going to trade, and you need $10,000 or pretty close to that for every full lot that you're going to trade. And there's reasons for that, and it comes later. If you need the later part, then you need to take some consulting with me and you have some faith and trust in what I'm doing instead of what all these guys out there are broadcasting to you. There's some of them that are very good. The question is, do they really know how to teach? I've taught martial arts, karate, for 55 years, okay? I know a little bit about teaching. I've taught computer programming to people, and I'm teaching currency trading now. So I'm an educator. I understand the educational process. So what I want to share with you today is, how do you get started? When you're looking at buying a course from someone, you're taking mentoring from someone, what questions are you asking? If you're 6 months of trading and trading a $10,000 account or a few minis or whatever, and you're asking questions like how you stage in or how you compound or grow a small account to a big account or how to use your Bollinger Bands or whatever, you're way out. If they're answering those questions for you, they're doing you a disservice. I have many reasons for that. If you go back into my video log here of postings, I've got over 300 videos posted. I've got my opinions on all that stuff, and you can read about that. If you disagree with it, don't listen to my channel. Don't ask me for help. It's as simple as that. I've been doing this a long time, and I want to be doing it for a long time, and I want to make a lot of money at it. So those rules that I'm developing are very important. How do you start to get to that point? Well, the number one thing that you want to concern yourself with after you've used the demo account to learn how to manage your trading platform so that you don't hit a market order instead of a limit order, for example, or you only close 2 of your lots instead of all 4 of the ones that you're there because you didn't know how to close all. How to do all that. You need to know what a moving average is. You need to know what a Bollinger Band is. You need to know what those things are. Not that you're going to use them, but you need to know what they are. Because when you understand one of those, moving averages, the one that you want to understand, all the rest of the indicators are based on the same thing that the moving average is based on. The average of past pricing. So right now, let's just learn how to do what's going on right now and trade for short term. Be a day trader so that you have your results on a daily basis so that you can build good metrics. You're not going to get good metrics by trading a demo account because you're missing the emotional factor of what a loss would mean to you. If you're trading a $1,000 account and you lose 8 pips, that's $8. $8 is a lot of money to lose. That's a beer. And it's just 8 pips on a mini account. How many beers do you want to lose? How many beers are you going to lose? Well, it's better that you're losing beers on the 8 pips than trade a $100,000 account with 10 full lots at $100 a pip and you're losing $800. $800 is a big deal. So you want, not knowing what you really need to know, do you want to be trading larger sizes accounts and losing that much money while you're trying to learn and you have an upside down win-to-loss ratio? You're winning 30 and you're losing 70. The math just isn't going to work out for you. You know, in all my videos, I quote this study that a retail brokerage outfit did over 43 million transactions of 25,000 of their customers, and found that 90% of those customers lost 90% of their money in a very short period of time. And the really bad thing about that was that 72% of those trades were winning trades. 72%. That means they were a 70-30 trader, but they were losing more on the 30% of the trades than they were winning on the 70% of the trades. So what's the problem? Is everybody stupid? No, it's the education. And I'm here to tell you that the education that's out there is bad. As an educator, I'm telling you that the education that you're looking at and that you're getting is bad. And if you're doing a signal service with somebody or letting somebody tell you what to do, that's twice as bad. If you disagree with that, all you got to do is turn my video off and don't come and watch any more of it, because I can't help you. So what do you need to do to get started? Learn the mechanics in your demo account, and then get yourself a live account and set your stop at 8 pips. No matter what it is that you... Well, don't trade crosses or exotic pairs where your spreads are 10 or 20 pips and the ATR on a daily on a 15-minute chart is 60 pips or some stupid thing like that. Trade the majors. There's 6 major pairs. Most of them are USD backed because that's just the way life is. And the majority of the market is trading there. It's a very liquid market, so trade those pairs. Yes, you got to come up with more margin, but I mean, you know, come on, what do you want to do? If you want to fix a steak for dinner, go down to the store and pick up a nice steak for $5 or $6, bring it home, cook it on the skillet. Because if you go out, you're going to pay $22 for that same steak. But you're paying for the ambiance, you're paying for the atmosphere, you're paying for the sauces that the chef puts on the steak, for knowing just how to get that steak cooked just the way that you like it and pair it up with different vegetables and things. That's what you're paying the $22 for, as opposed to the $6 that you can make it for on your own. And so when you're going out there to look at the trading, why are you trading? If it's just to have a lot of fun, take a $500 course or a $1,000 course and you let them teach you what a pip and a Bollinger Band is, and good luck. I want to work with people that want to replace their job income, or, you know, replacing a $70,000 a year job income is a little difficult. You're not going to do that right away. But if you're down making $20,000 or $30,000, if you could even make $10,000 a year or $8,000 a year. If you're making $50,000 a year and you could make an extra $10,000 on that, that's a 20% raise. Your boss isn't going to give you that. And yet to make $20,000 is relatively simple, given that you have enough money and you've got the correct structure and framework behind you. So where do you begin with that? How do you begin with that? Assuming that you have this live account and you're trading one mini account with an 8 pip stop, that's $8. And you don't know what you're doing, but you're trading a real account. How much are you going to lose? $8. Okay? How many times are you going to lose? I don't know. At $8 a loss on a $10,000 account with a $600 margin and $400 a runway, you divide 8 into 40, and, you know, that's probably 50 trades that you'd have to lose in a row before you went down to margin. That's why you've got that extra runway money. Okay. Well, don't you think sometime in that 50 trades that you're gonna win a few times, and as soon as you win one, you're gonna say, what was different? What was different that I did there than all the previous times that I lost? Once you figure that out, now you know what not to do. Don't do any of that stuff that you lost. Do the thing that you won. But you're still going to lose, because just because you do the right thing doesn't mean that you're going to win. But if you do the right thing enough times, you'll win enough times in relationship to what you lose that you'll end up net profitable. Given the fact that when you win more than when you lose. So that's your win-to-loss ratio, not your win rate. It's your win-to-loss ratio. Look, I got a degree in physics and almost a minor in math. I'm giving you the terminology that you need to use and not what all these other guys are saying. This stupid shit about risk to reward ratios and all that crap. It is asinine from a theoretical standpoint and also from a practical standpoint. It's a win-to-loss ratio. That's what it's called. There are components of the win-to-loss ratio. It's not just the number of times you win to the number of times that you lose. It's an expanded equation with 7 different parameters. And your win rate, win value, your average win value is just one of those 7 parameters. Your loss, average loss value, is one of the other parameters of that win-to-loss value. So you don't have any control over how much you're going to win, but you have absolute control over how much you lose. So if you always set your loss to 8 pips, then you've maximized the amount that you're going to lose. So once you get your win-to-loss ratio to the point where you're winning more times than you're losing, you're still not going to be winning over net the correct amount of money to make all the trading worth your while. So the next thing you need to do is you need to work on, well, how do I increase the amount of money that I win when I win? Okay, those are the 2 steps that I'm advising you to go through with the foundation based on a 1 mini lot, $1,000 funded at $1 a pip. That is the advice that I would give you. Now, how do you get your win-to-loss ratio up is a whole course discussion. How you get your average win value up is a whole course discussion. If you get involved in this stuff and you've got questions, send me an email. I'd be glad to try to help you out at no charge. I want to see you succeed. I want to see you be happy in your trading because I think it's the greatest thing, the opportunity that you have available to you. Don't screw it up listening to some jackass driving a Lambo telling you that the easiest way to make, $20,000 a month is to do X, Y, Z, because it's bullshit. It's 200 to 1. It's too much risk. It's not worth it. It's nice to watch the video for entertainment purposes, but that's all it is. So send me an email, and I can try to help you out. Almost all the folks that have emailed me, I've been able to help them. Some of them don't even thank me. They just go off, and I'm sure that they're better off for it, and that's fine. If we get involved in a lot of questions and emailing back and forth, that's fine. I don't mind spending time with you if you're serious. If you're an asshole, I'm not gonna waste my time. I'm gonna tell you you're an asshole, and I'm not gonna talk to you. So if you've got good intentions and you really want to learn this stuff, I'd like to help you out. But when I give you an answer to a question that you're giving me, many times what I find is you don't really understand what the question could be, and I'm answering what that question should be. And so sometimes it doesn't make sense, and I have to work with you a little bit. But if we get really involved and you really get excited about it and you really want to do coursework, okay, I've got courses and mentoring and stuff, but it's really expensive, you know. I mean, you're not going to learn to be a software engineer. I was a software engineer for 33 years. They paid me a lot of money to do that. But I had a professional degree. I had a degree in physics and did computer programming and a lot of math and stuff, so that leads right into to that. But it cost a lot of money to get that degree. So look at any education that you do, any books that you buy, the courses that you take, or whatever that you charge, looked at as an investment in your education. The more that you look at stuff, the more you'll be able to judge the quality of that education, and that'll give you a step up in identifying what the different problems are that you're faced with when you're trying to trade. You can't just trade and take a loss and go, oh, well, that sucks. You got to figure out, well, what's the problem? And that's what I think a mentor is able to help you with, is not only to identify the problem that you're trying to solve in that particular phase that you're in your trading, but also the problems that you're actually experiencing that's not giving you the success that you feel that you should have in your trading experience. You know, and that's going to take some time to work with somebody, and so we'll work out something so that you can pick a course of study that probably not going to be financially feasible for you, but you know, that's just what it's going to take. You know, you want to buy a truck, and it's going to cost you $60,000 to buy a truck in the United States today, but you're going to use that for your business, hauling wood and logs and building stuff. That's what you're going to have to pay. Nobody's going to have any sympathy to say, well, you can't afford the $60,000, or you can't afford the $20,000 down payments and the $800 a month car payments after that, truck payments. That's not anybody's problem but yours. If you want to be in construction, you need a truck. So you gotta buy the truck. You can't go into construction first because you won't have the tools or the ability to get the tools to the job. What are you going to show up with, a backpack and say, oh, yeah, I could build your house for you? Nobody's going to believe that. In order to work with me, you're going to have to be realistic, because I'm going to be realistic with you. And my best intentions are for you to be successful. And the few of you that decide that you want to invest your time and your money into consulting, that's great. It's going to cost you a lot of money, but I don't need your money because I'm retired. I retired over $1 million from my real estate investment. I'm having a great time. I'm enjoying myself doing these videos, and the people that email me, I'm more than happy to be able to have helped so many of them get on the right track. And they get back to me months and months and months later and say, hey, things are working out a little bit better, but I had a question about XYZ. Great, let's do that. Because solving those problems, once you have a framework and you understand the methodology, it's easy to then go in and just solve a problem. If you're really just getting started, if you want to get started the right way, you have to go on this progressive path, which I've just outlined for you, which is start with a mini account, $1,000 framework, 8 pip stop, work on your win-to-loss ratio, and then concentrate on your average winning value. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.